we can get the discussions. So we are grateful. I know you invited us to this meeting, and we are very, very happy. We have also invited 2 representatives from KU, Professor Waudo. Professor, you are here.
Yes, good morning, and thanks for the invitation.
Okay, thank you very much. And Professor Gary?
Yes, morning. Thank you so much. I'm in house.
Good. Thank you very much. Professor Gary and Professor Waudo are also working on women's economic empowerment in KU, in a research hub, like ourselves. So we thought it would be good to take this opportunity for us to hear about credit guarantee. And because we are both interested as institutions, interested in promoting women's entrepreneurship, women's businesses, and so on. I know they are also working in manufacturing and so on. So we thought it would be good for us to come together. I have also invited, I think, Elizabeth. I don't know, Elizabeth from the CS's office. I don't know whether she has been able to come, but I was inviting them at night, forwarding the link at night to her after I got it in the evening. And thank you very much, Mr. Budi, for that quick response in terms of inviting us. If you don't mind, Ronald, I will quickly ask the team from Nairobi University just to say their names so we don't waste a lot of time. Okay, now I normally deal with the Zoom, not team, so I'm going to ask them to begin with Maroka. Whoever is not here then, or whoever is not there and I have not mentioned, they can they can introduce themselves. Maroka, can you introduce yourself?
Yes, Professor, good morning, and good morning, the team from the National Treasury and KU. My name is Agnes Meroka, and I am part of the team from University of Nairobi Africa Women Studies Center. Thank you.
Thank you very much. She's from the School of Law. Elizabeth?
Good morning, and thank you for coming, the team from Treasury. My name is Elizabeth Auma. I'm also part of the research hub at the Africa Women Studies Center.
Professor. Can I hand over? I'm chairing a meeting with the team from Treasury. Okay. Yes. Okay, let me call you. Thank you very much. Sorry. My apologies. I had a call which I could not say no to from another boss of mine. Sorry. Yes, Elizabeth. Elizabeth, you finished?
Yes, I did, Prof.
Okay. Musioki, are you here?
I'm here. Good morning, fellow colleagues. My name is Peter Musioki from Africa Women Studies Center. Thank you.
Okay. Who else is there?
Prof, may I say good morning? This is Linda Musumba.
Linda, thank you so much. Yes. Continue, Linda.
Yeah, I was just going to say that, and I work closely with the African Women Studies Center as well as the UON. Thank you.
Yeah, thank you very much. The next person who is there?
Good morning.
Good morning. Yeah, continue.
My name is Mero Aboikanyi from the African Women Studies Center. Thank you and welcome.
Thank you. June Obara, please.
Good morning, everyone. My name is June Ombara from African Women Studies Center. Thank you.
Thank you, Ruth.
Ruth Wamoyo from the WeHub and the AWSC.
Okay, thank you. Joka. Okay. Sorry, who else is there?
Professor, we have Professor Kereti with us, and we also have Dr. Nkatha Kabira.
Okay, please, Professor Kereti.
Good morning, everyone. I'm Tabitha Kiritinganga from the School of Economics, University of Nairobi, as well as the African Women Studies Center we have. Welcome, people from Treasury and Kenyatta University.
Thank you very much. Nkatha?
Nkatha Kabira, School of Law, University of Nairobi.
Thank you very much. Have I left out anybody else?
Yes, Professor, we have Njeri Karuru.
Njeri Karuru, please go ahead.
Good morning. My name is Njeri Karuru from the African Women Studies Center.
Okay, thank you. Anybody else? Okay, Nyamongo. Dr. Nyamongo, introduce yourself. Maybe she is stuck on the...
I'm trying to, thank you. I'm trying to get in.
Okay. Are you in now? Okay, can you introduce yourself?
Yes, my name is Grace Nyamongo. I teach at the African Women Studies Center. I'm glad to join you here.
Thank you very much. So I think we have listened to everybody, and when we come to the discussions, maybe one can introduce themselves. I want to welcome Mr. Roland Budi, and I will just say that the African Women Studies Center that is seeking collaboration with you, that is having this conversation, is a very unique center. In fact, the only one within the academic institutions and also in the region. We have women's studies, but we do not usually have African Women's Studies Center. It's a multidisciplinary center that has representatives from all the colleges of the University of Nairobi. As you can tell, this project that we are talking about, we have representatives from the School of Law, School of Economics, Institute of Development Studies, Population Studies, and other departments. We have been, working as a center focusing on women's issues, not gender issues, specifically on women's issues, because literature shows that women actually have been left out of financial inclusion, representation, and all other areas. So we have a PhD program and a master's program, but we also have a research and policy advocacy division, and this policy and research division is housing a project on women's economic empowerment. So we are very happy to really collaborate with you. We are focusing on affirmative action programs on women in formal and informal sector, child care and women's work, as well as working with women's organizations. So we found this credit guarantee really very, very important for us to engage with women's organizations, women in business organizations, women entrepreneurs, to upscale, their access to loans, and so on. And in that way, upscale their businesses. So basically, those are the few remarks that I wanted to give, and then I hand over to you. Thank you very much, Mr. Roland.
Thank you, Prof. Thank you, Prof, and very well to have you guys and your team in this discussion. Let me first of all allow my colleagues to introduce themselves very quickly. Then I would make my remarks and take you through the discussion on the guarantee. Our team from Treasury, please. In no order, please. Let's start and quickly go through.
Good morning, our team, our friends from the University of Nairobi and KU. My name is Sila Muthoka. I have been working on the implementation of the credit guarantee scheme at the National Treasury. Thank you.
Okay, thank you.
Good morning. My name is Masingata. I am from National Treasury, working for credit guarantee scheme, and also from a department, financial sector affairs. Thank you.
Good morning, everyone. My name is Deborah Muricho. I'm a technical team member who has been working on the credit guarantee scheme. Thank you.
Good morning. My name is Teresa Lokor, part of the team working at credit guarantee scheme. Thank you.
Good morning. Just as Bundi here, also a team member working on the credit guarantee. Thank you.
Do we have any other person?
Yes, Chair and Professor Kabira, I think we have our colleagues from Kenyatta University. We have some colleagues as well.
Yes, my apologies, Professor Waudo. I greeted you and then I thought we had introduced you. My apologies, Professor Waudo.
Okay.
Yes, this is Professor Waudo, the hub leader here at the university. Thank you.
Okay.
Thank you. And Professor Gary?
Yes, morning again. My name is Gary Grace. I'm in charge of advocacy and communications at Kenyatta University We Have. Thank you so much.
Yes.
Okay.
So thank you. I think we've gone through the introduction. The others who will come in, we will know them probably at a later time. Let me make a few remarks and then make the presentation. We are really constrained of time. I am supposed to join a World Bank meeting at around 10, but of course I'll be here. We shall be here up to 10:15. So we will confine our discussion within that time, so that we are able to. In fact, almost the entire team will need to join that meeting at that time. Second thing is we are happy to have you guys on this discussion with the academia. We're really happy to discuss with professors on what we are doing in our country. This is really a very good thing. I think some of you, we met you during the discussion on Biashara Fund. I am part of that arrangement, but I'm not the lead person on that one, where we are trying to merge the Biashara Fund to make it more efficient and effective. And these reforms are connected to one another in terms of what government wants to do. So you will be seeing it in our presentation. The government is quite keen about financial inclusion of the marginalized and the people with the disabilities. So broadly, the intention of this discussion is to, one, bring to speed our academia on what we are doing. For purposes of advancing collaborations, we are happy the work you're doing. We also happy that the Center for Women Studies was able to support us when we were making the law and the regulations, and we really appreciate your comments. Very meaningful comments and very useful comments that we used in making our advances. So we look forward to implementing this scheme. And now allow me to go to the presentation. I don't know whether it is being seen or I need to do something. Are you seeing the presentation? Are you able to see?
Yes, we are able, but put it on slideshow.
Yes, that one I'll do shortly. Okay. Is it now better?
Yes.
It is. Yes.
So we call this one our deep dive into the credit guarantee scheme for MSMEs. MSMEs, micro, small, and medium enterprises. And I must make a case here that from where we sit, when we look at a woman selling burgers, those are the people we are talking about. Those are our MSMEs, broadly speaking. So that's the first thing. This presentation will go through 5 areas: the introduction, the case for guarantee in Kenya, the journey. How have we come where we are? It's been a long journey. The current credit guarantee design, benefits, or what we call value proposition, and just a few things. I will spend more time on a few slides, and others I may not spend so much time, depending on what I consider to be quite critical. So in our introduction, we ask ourselves the first important question: do MSMEs matter? And in this case, we say, let's look at the numbers. Number one, they employ 14.9 million persons and create over 91% of new jobs each year. They account for 34% of the GDP. 78% are unlicensed, that is Kenya Association of Manufacturers. Licensed MSMEs account for 90% of the value already added by all MSMEs. So of that 34%, the small number that is registered contributes about 90%. 58% of employment in the unlicensed MSMEs. And then another thing that we note, averagely MSMEs close within three years and about 4 years. What is the problem that faces our MSMEs? Survey 2016, this is KNBS, cited shortage of operating funds as a leading cause for high attrition. Others include poor roads, lack of markets, lack of competition, license requirement, and many other things that affect. So of course, we appreciate that the problem of MSMEs goes beyond just money. And the last bullet there is critical for us. This is what this scheme is addressing. Lack of collateral for credit is the only challenge similar to that affects both licensed and unlicensed. So that's what this guarantee is seeking to address. Let me progress. MSMEs can access credit already, and they accounted for 69% of total private sector credit 3 years before 2016. Licensed MSMEs received 91 and 92 total credit requested from a lending institution. The lending source for credit was banks for licensed MSMEs and MFIs for unlicensed. 62% of MSMEs and 46% say they did not need credit. Now, this is a question for scholars to help us unravel. What do we do to this category of people? When they were spoken to by the KNBS, 62% of them, they say they don't need. 46% licensed say they did not need. The real story about the terms of credit of MSMEs received from lending institutions include high collateral requirements, up to 240 of the loan value, lack of sufficient collateral. Now, combined with risk perception, when they go to banks, they are looked at as very risky borrowers. High interest rates, shortage of repayment period, short repayment period. This is due to risk-related constraints. So they receive inadequate credit for their needs. And we had a survey done last year. This was also confirmed that this is a problem that is really facing our MSMEs, who for us include a majority of them being women. So KNBS went further to look at what are the main problems of perceiving the loan to be inadequate by MSMEs. This is the story of perception. And there are various reasons. For micro, lack of collateral and high interest rates are the leading cause. Small, that's collateral and high interest rates. And of course, other reasons there. And in the overall, it looks like collateral and high interest rates is the main cause of the inadequate. Then reasons for perceiving the loan to be inadequate by the top 4 lenders. The commercial banks, it's also collateral and interest. Microfinance, a bit of collateral, and then the high interest rates. And then public finance agencies, that's the same. Then SACCOs, like that. This is done by KNBS. Now, this is where the story begins. Why do we need a credit guarantee scheme in Kenya? Number one, this is a policy tool used globally and to improve access to credit for MSMEs, startups, and targeted sectors. We have done our own desk research. We found out that in Japan we have CGS, In Korea, we have CGS. So these are policy tools used by governments. Economic gains, targeted credit support to MSMEs, likely to lead to growth output, employment, and wealth creation. And then addressing market failures, where we have arid, small, and regions that do not attract credit. CGS can be used to address these market failures. And leverage is a very important thing when you talk about guarantee. Leverage here, we are saying is achieved in terms of unlocking surplus liquidity available in the banking system for the benefit of MSMEs. Last year around August, when we had COVID, CBK reported to us the banks were having liquidity of about 58.3%, over above the 20% requirement. So the problem on the market may not be the lack of money. It is not that the banks do not have money to give to people, but it is the other things that make them lend. If you go to KCB, you go to these big banks, they actually have money. The problem is they're actually surplus liquidity. The Kenyan market, actually even World Bank has done another survey, and we're having a discussion with them. And it's confirmed that the lack of liquidity is not the problem on the market. They support the achievement of Vision 2030, and then deepening financial access to vulnerable, ensuring that MSMEs, women, youth-owned businesses shall be able to access financing. Credit guarantee solution for MSMEs. This is an undertaking to pay and get the words very clearly, a pre-agreed part of or portion of a loan extended to an MSME in case of default. It is an undertaking that you make. This is it alleviates the part of the default risk associated with MSME and gives FIs more comfort when lending to MSMEs. FIs are expected to relax some or all loan conditions: collateral, repayment interest rates, grace period, eligibility criteria for MSMEs qualifying for credit. And mark the word, they are supposed to relax some or all. Credit guarantees therefore enables MSMEs to receive higher amounts of credit at better terms without additional requirements. Suppose an MSME loan is guaranteed, then there are two scenarios. One, it is possible for a default to happen in the unlikely circumstance. Those of you who fly, many times you are in the plane and they tell you, in the unlikely circumstance this happens. I always wonder whether you can do those things they say. So this is the default has happened. The FI will launch a claim for the guaranteed amount defaulted. The guarantor will validate the claim. Guarantor will notify the FI. Guarantor processes payment of the claim. FI continues to recover with the MSME, and recovery amount shared in agreed guarantee contract. And no default occurs, which is supposed to be the main case, because we have the statistics on the market. The current NPLs are around 13.5%. So default rate in the market is 13.5. So we're not expecting that money will be defaulted. No claim, and the guarantee and another MSME benefits, and we are all happy and laughing for the economy. Credit guarantee is not a fund, and I have told you I'm part of the reform around the Biashara Fund. So these are reforms that are interconnected. It is not a fund because the value of money in a credit guarantee arrangement is superior to fund by a big margin. Why is it superior? We leverage on private sector resources, skills, expertise, and liquidity. You are aware that banks have the lending skills, and we also use their appraisal expertise already in use and backing the loan with a limited cover. Kenya shilling, one shilling can unlock more than 24 in the market. Guarantor will only lose money when the default occurs and ultimate recovery is zero. And this is uncommon. Since NPLs are 13, we can achieve a leverage. We can multiply our money by 4 times. depending on the loan covered. This is a case in point of how leverage has happened elsewhere in the world. The CGS in the world, we have Japan. The guarantee fee is 1.25. And I will be telling you that the guarantee fee, when we are doing is a very nice guarantee. We are not having this fee. But you can see globally, all these schemes have a fee of 1.25, another one up to 2%. But I want you to look at the last column. The last column, actual leverage. In Japan, that scheme was able to multiply the money by 19 times. There are two types of schemes there. Another one, 18.6. So 1 shilling multiplied by 19 shillings. Korea, 9.8. This is one of my favorite countries where I spent 1.5 years. There is Kotek there, leverage about 14.4. This is for technology. You see the way they are doing. Malaysia, they have their scheme leveraging at 4.3, Indonesia 22.2, Taiwan 20.6, Thailand 4.6. Of significant is that look at those leverage ratios that we want to do. Some of the key principles, I will not spend much time here because this is for us ourselves. Should be a legal entity that is independent, should have sound corporate governance, partial. So it is partial to provide the right incentive for the borrowers and lenders. Partial means that we don't cover 100%. Should be independent and supervised well, and should promote mixed ownership. Key journey, Kenya's journey. This thing has begun around 2009. This story of guarantee, and our current PS was part of this. During the National Economic and Social Council, they conducted a study and proposed that guarantee scheme was one of the ways to go. Around 2007, 2009, 2013, we developed a bill. This bill got into headwinds around 2015 when we had the reforms of merging state corporations. So this did not go far. 2017, is when I joined this team and we began to revive this baby. And this baby, we did a task force, we did reviews, and we proposed that the best way to do this is to do a limited liability company with investment from government and private sector and development partner to ensure sustainability and reduce moral hazard. This was benchmarked. One of the benchmark is one of my favorite countries, South Korea, where 51% is banks and 45% is government. That then provides the right incentive to manage the scheme. So we had done all the design work, but COVID came in. Of late, wherever comes your way, you say COVID. Arising from the effect of COVID, we fast-tracked this and developed a design for guarantee scheme, and this is what we are now having. And this is an interim credit guarantee scheme, just to test the waters and see how this works for our country. What are the objectives? Improve, stimulate national economy by encouraging additional lending to MSMEs, increasing investment opportunities for MSMEs, strengthening skills and capacities, facilitate financing to MSMEs, create a conducive environment to promote partnership between government, financial intermediary with respect to credit guarantee. What is the legal framework? We have gone ahead to define what we mean by an MSME. We want to be sure that we are not mixing and also the beneficiaries are not properly targeted. So micro is defined in accordance with the MSMES Act of 2012. Annual turnover 5 million, and then of course employees are up to for micro it's around 500,000 with employees of up to 9. Of course medium is defined in our act as those with 5 million up to 100 million. We have the micro, which is defined according to MSMES Act, and the MSMES Act defines this in terms of turnover. For micro, it's supposed to be the mamambogas, 1 person to 9 people you have employed. Then for small is also defined according to the MSEA Act. The mamas who are having the caves, there are nice caves all around. And then, of course, the medium. These are now the mamas who have now grown a bit. They have moved to 5 million to 100 million. Then it gives the CS powers to establish a scheme in Section 58 and may guarantee credit prescribed, and then can prescribe the regulations to provide eligibility criteria. It is only for a portion of the credit, and we saw that's the best practice globally, so that there is a right incentive to the borrowers and the lenders. Establish a scheme in Section 9. You must define eligibility, and that we have done. Reporting of the guarantee in Section 32 and 59 of the PFM. We must report reports of the guarantee within 7 days requested by either house. That we must do. In fact, this is important for us. We need to report on in disaggregated reports, so that we are not just saying people are benefiting. The disaggregation must show women, youth, people with disability. We must also disaggregate regions. Reports must show that this is not just benefiting a small region. And the banks are alive to this. The legal framework, we went further as a team and developed a regulation that the reports will be monthly. So this is a very good thing. We will be receiving monthly reports, so that we are not waiting for a whole year to discover that we are not doing very well. I am told in most third world countries, we are very good at postmortems to find out what caused it to die, instead of protecting it from dying. So here we are going to follow this on a monthly basis. Borrowers must be a registered business. This is what the MPs guided us. Registered taxpayer, compliance with the account government, hold a valid business permit, trade license, operation within 2 years, credit worthy, and this is actually all in the regulations. So these are the kind of borrowers, and we want you to help us build the capacity of our women to become this kind of borrowers. This is the plea we shall be making to you. The FI must be licensed by CPK, and this is clear. They must have experience in lending to MSMEs. You cannot be a bank that has no experience and then we bring you on board. Commit to leverage at least 4 times. We saw the leverage times that we found out globally, as we are committing for at least 4 times, which means that if we have 3 billion, we are going to do 12 billion. 10 billion, we are going to do 40 billion. When you hear the president saying we shall do 100 billion on the market, it's a very innovative thing. We only need 25 billion, and the market will have 100 billion. We have kept that there must be a wide geographical coverage and maintain a high portfolio. And so they must actually manage the account loan for the borrower, diversified in allocation of the guarantee over sectors. We want them to cover all sectors, marginalized group, continue to recover normally as they do it. The legal framework, this is the claims process. I don't think we need to belabor so much on this. This is when the default has happened. And this is what we'll be doing. The administrative framework, we have a steering committee chaired by the PS Treasury, 3 independent board members, and a secretariat staff that is set up at Treasury, running the scheme. And the team meeting you today are the team managing the scheme. How is the product looking like? It is a credit guarantee scheme to maintain access to finance. Registered MSMEs, risk shared 50-50. It's called pari passu arrangement. Maximum exposure 25% of the principal amount. Maximum amount is 5 million. This is what we can guarantee on the market. This is not cast on stone. Going forward, we can revise it. But I think this is good for us to make sure that the money we have goes to many people. Interest rate, market rate, discount by the lender. We are insisting that there must be a discount, term maximum of 3 years, prepayment, no prepayment penalties allowed, grace period up to 5 months, no payment, interest payment, and then facility issued upon establishment. So this can now be issued because we have an establishment. And you must see what the government has done, which is very important. No guarantee fees at this time. But you saw globally, there are fees between 0.5 to 2%. But we made a deliberate decision that there are no fees for this scheme. And it doesn't mean that in the future we shall not introduce fees for sustainable. Actually, we have had major issues from major development partners. We have just stood our ground. World Bank have asked us, why are you doing a guarantee without a fee? Many people have asked us questions, serious questions. But because we are also a government, we believe that people are disproportionately affected by COVID. This scheme is with no fee for now, not forever. And that must always be the disclaimer, that is forever, not forever. I think we can proceed like this. How do you get this loan? You get the loan by doing the following thing. Unapata namna gani? This is what you need to go and tell women. Qualifying MSME, you will approach a bank for credit facility. Credit facility is evaluated and approved based on standards and policies. And by the way, the banks will be keen to meet the women's because they must meet a certain threshold. They are really waiting. PF5 will register the credit with the scheme as part of the portfolio on a monthly basis. Credit facility registered as part of the portfolio. Credit facility managed by the PFI. The banks are the ones managing it. Normal collection and recovery process. You will collect the money. If you are a cooperative bank, you will continue to collect the money. All credit facilities under the scheme must be monitored with the same diligence as any other credit facility in accordance to PFI policies. So we are trying to avoid a moral hazard. This is not free money going to the market. We are simply incentivizing the market to do the right thing. What is the value proposition? Value proposition for the MSMEs. You put the value proposition for women. The CGS can have significant impact on quality of access of credit to all the MSMEs. A successful CGS can also impact on registered business by incentivizing them to register. Capacity building is expected to play an integral part of development of the MSMEs. There are a lot of people who are interested in doing this capacity building, so for MSMEs. Value proposition for government, CGS directly impacts the Vision 2030. It's a critical financial market tool. And then we want to leverage on private sector, provide efficient and scalable solutions for credit guarantee schemes in Kenya. Value proposition for the PFIs, CGF is expected to strengthen the market infrastructure, increase MSME lending, and managing the risk. Expected to benefit may be additional income from the CGS loans, dividends, leverage effects. The guarantee will allow the larger loans with inherent risk and recognition of guarantee loan in the provisioning of the books. And then maybe there will be other policy interventions. Our expectation, we expect that I'll have a leverage of at least 4 times in the interim period. With a total, with a capital of 10 billion, we are going to do 40 billion with extended to MSMEs. You know, for funds like Biashara Fund, it is 1-to-1. If government puts in 10 billion, it is the 10 billion that will get to the market. But this one, if we do 10 billion, we are expecting 40. Have we done this before? Yes. We have done a program called Profit, which was a risk-sharing arrangement between 2017 and 2019. There were 2 institutions, Barclays Bank and AFC, and we achieved a leverage of 4.75. Up to now, and this is very important, there is no claim has been made on the guarantee, implying that the borrowers paid all the loans expected. Important takeaway, the guarantee structure for credit guarantee scheme is the first phase of implementing, informed by immediate need to sustain access to finance. After the interim one, the national treasury will roll out the initially proposed, which is aligned to the international best practices. Critical issues for noting. Social. In other regions, the moral hazard related with guarantees credit is lower, and the scheme can appraise loans, proposal startups, and for guarantees, e.g. Malaysia. This is what we are telling ourselves. And you know, you are a part of us, and you are the women of this country, the professors of this country. You need to help us. We have a problem with our social fabric. If we went ahead and you declare that the government has guaranteed your loans, nobody will pay those loans. And that way, we're not helping ourselves. We are neither helping our borrowers, neither are we helping ourselves. So this is one thing that we know. Moral hazard is a real problem. If the borrower knows that their guaranteed repayment may be compromised. So this is important as you talk to your clients. Legal issues. MSMES was infeasible under the PFM Act. We must appreciate ourselves as a country. The PFM Act of 2012 was very clear. I think they were addressing moral hazard from a bigger perspective, and they ended up locking out any guarantee to small person. The guarantee that was envisioned under the PFM Act Section 58 was only for state corporations and county governments. So one of the work that we have done as a team is to do the amendment to the Act and develop regulations. So now there's a law that allows this. Political, implementing the scheme using public funds exposes us to political risks where borrowers may be compromised against repayment of loans. So those are things we are aware of. I think this is just a saying that I have picked. A candle loses nothing by lighting another candle. This scheme, we hope to light very many candles for women. The women who are lighting korobois. You know, I grew up in the village, and I know that small tar called koroboi. So I think we hope that we will help to light many candles. We are happy to partner with you. And this is the end of our presentation. Thank you, very good people. I think I hope we have some time for discussion. I would want us to discuss for about it's 10 minutes to 10. I would want us to go up to 10:20 so that you allow us to go to the other meeting in terms of it's a very important meeting. We are also discussing access to and seeing how World Bank can support what we are doing. So I think for purposes and intent, we can do up to 10:20. I want to submit our presentation and allow Professor to now lead the team to raise a few questions. And my team, please pick the questions, and I will be asking you where you can to answer them. So we have about 30 minutes for this discussion. Asanteni-san.
Thank you. Thank you very, very much. For that presentation. It's very, very informative. In fact, I was wondering how we can get it because we need to simplify it as we talk as women. I was going to say that maybe we spend another 5 minutes or so, or 10 minutes raising the questions, and then if it is okay with you, we wanted just to brief the team on what we think we can do to upscale women's participation in the credit guarantee. So that you see whether that would actually be useful, for you, for Treasury, for your team. Okay, can I?
So you are saying, so let's agree, 5 minutes, 5 minutes your questions.
Yes.
And then the rest.
Yes. And then
you tell us what
we can spend. We don't have to spend a lot of time. I think we have about just 4 slides. We can just. We talked about a little bit about what strategy we think we can use to do this to support, the upscaling of women's intake, of credit guarantee. and some of the organizations would like to work with, and then we can go to the discussion. So we can actually raise the questions for about 10 minutes, and then we spend another 10 minutes. Then we can talk about. Then you can respond, to both our presentation and the questions we are raising. But you can also respond to the questions as we raise them. If I don't see a hand, then I'm going to call people and ask them to raise the question. And I'll begin with Professor Kiriti. And please, let's stick to the point. Raise the question, be precise, so that we can take as many questions as possible. Okay, Professor Kiriti, any comment?
Yeah, thank you, Professor Kabera, for giving me the first chance. And thank you, Ronald, for that very, very good presentation. I loved it. And just like you, I'm also running for another class because I have a class within the next couple of minutes. And in your presentation, you emphasize that you are actually eyeing the mama boga. And I was, in my mind, I was thinking, okay, the mama boga that I know, it could be the young woman who is selling clothes in in a market, toy market in Kibera, in Kawagwere, and so on and so forth. And and then when you defined the MSME, it's one that has got a turnover of 5 million and 100 million. They employ between 51 and 250, and then in terms of machinery, 250,000, and if it is manufacturing, 150. So actually now I say that is not Mama Boga. So are we back in marginalizing these same women that we are saying we are eyeing? So please clarify that. Thank you.
Thank you. Shall we take the questions and give you the opportunity so that, or do you want to answer one by one?
I think I can clarify this one very fast so that we don't. I think she's clear.
Okay.
The definition that we splashed on the screen is truly what you are saying, but we have another definition that is provided for in the MSEA Act. And that is part of our definition of the micro. So the micro is 0 to 9 persons, employees, turnover per annum 500,000 shillings. If you divide that per month, that's 40,000 shillings, around 40. So micro is actually covered. So what we have is micro, small, and then medium. I want to ask Sila, can you define for us small? How is small defined?
Thank you. Small is in that bracket between micro and medium, and so we have 10 to 50 employees, and we also have 500,000 to 5 million turnover, annual turnover. Yeah, and you have also done very well to clarify that the Act does not define small and medium. Those ones are already defined in the MSEA Act. So that's why the slide was only presenting a definition for medium enterprises. Thank you.
So the Mama Boga is covered.
Okay, thank you very much, Professor Waudo.
Thank you very much. Thank you very much for the presentation. I just wanted to ask about this leverage. You have picked those Asian countries in the way they have actually performed. And I'm just wondering whether you have put into consideration the Kenyan culture, the corruption, and the other, the way we have behaved with other schemes, for you to be confident that your scheme will generate 4 times what you have said. And number 2, I just wanted to say that I was glad to hear about the monitoring and evaluation, especially the monthly monitoring and evaluation, because observing other schemes, sometimes they are implemented, but there's no M&E. So we end up with a scheme that doesn't actually get sustained. So those were my 2 comments. Thank you.
Thank you very much, Dr. Kitiabi.
Good morning and thank you. Professor, I came in late, so I found the end of the presentation because I didn't have the link. But the 2, I think the major question that we are talking about is actually the definition of the the businesses. That excludes quite a number of women businesses. And I have always had an issue with the way our government defines small and medium businesses. It excludes quite a number, and IDS has done studies to show that actually they exclude quite a number of businesses, and they exclude women generally. But my substantial point is this: the problem in general around the world with small businesses is not the problem of credit risk, which I think this guarantee scheme from Ronald's presentation, this is what this is what they are targeting. That they are looking for, they are guaranteeing the risk as a government, but that's not really the problem. The problem is the cost of access to loans or to money for running businesses. So they are not this just, and he mentioned himself that in the program they had for profit, I think there's a program they had called Profit, and he gave the example that in that program there has been nobody who has come to say, oh, they have not paid. So that proves that the problem is not the risk. The problem is the cost of access to these funds. And I can see that this guarantee scheme is not addressing that, and that is going to affect us as the We Have. So how are we going to address the issue of, first of all, the issue of definition, which I think the two speakers have illustrated to, but the issue of the cost of accessing these funds, which is the problem with most small businesses across the board, men and women, but of course it impacts women more. Thank you.
Okay, thank you. Rosalind?
Thank you, Ronald, for a wonderful and informative presentation. Thank you, Prof, for organizing this meeting. My question is, women enterprises, or rather women entrepreneur, the main challenge according to the various surveys is that uptaking of credit facility main challenge is the lack of collateral and high prohibitive interest rates. So now this leaves me wondering, how does the CGS address the challenge, especially after I have visited several banks and inquiring about the CGS and the requirements they're asking for MSMEs or other enterprises to access this fund. The interest rate is still being charged as normal. That is, to be precise, from 12% to 14%. So how does the CGS address this challenge of high interest rates?
Okay, I'll go to the next one. But before that, let me just say, Roland, that when we are talking about doing research, that is the kind of thing we'd also be sharing with you. That these are the issues that are coming out for the women, and then maybe your committee hopefully can look at them and think about how to address them. But Grace Wamwe, I'll give Grace Wamwe and Wabui Kanyi, and then we'll allow you to.
Thank you so much, Professor. Thank you so much. My concern, and I think the presenter also mentioned it, but to me it's such a big issue. It is this idea about people's perception of government funds or government money and as free, and especially you also mentioned the political list. Now we are going through a very rigorous electioneering period. And anything coming from the government, there is a perception or a concept that the people perceive it. They say it on this divide or on this divide, because definitely we are divided politically. So that is one concern I have. The Mama Mboga now, where she is, how should she perceive this government credit forever? And then in that case, considering like the Fulisa accounts, which were being given through the mobile fund, you go to the rural areas right now, and so many people, those Mama Mboga, don't even want to use their mobile M-Pesa because it is already frozen. So how are we going to circumvent that? I heard you say that our lowest professors is to train Mama Mboga about this. But I'm finding like training alone is not enough. So how are we going to change that perception and that attitude? Thank you so much.
Okay, thank you. Wabui Kanyi? The last one. Okay, if she is not able to connect or something.
I'm there.
Yes, go ahead.
My question have been alluded to by Professor Keret and also by Dr. Kitiambi. It's about the issue of the credit guarantee having certain criteria for one to access it. When Dr. Ronald was presenting, she talked about the MSME being credit worthy. And since that one has not been very well clarified, I'm just wondering whether this issue of being credit worthy will not still lock out many of the men and women, particularly women and the youth, who may be running unregistered businesses, such as what we are talking about, the mama boga, the hawkers, and that category of the society. So maybe this being credit worthy maybe should be better defined. Otherwise, it is going to lock out a large number of the population. Thank you.
Okay, thank you. Thank you very much, Wabui. There's a question you raised, Mr. Roland, and I think it's an important research question when you are giving statistics that there is, there's such a high number of people who say they don't need credit. Why don't they need credit? And you can tell they need it by looking at them and looking at their businesses. I think it is a very interesting question, and the research can also, try to answer that question and think about the way forward. But I'll hand over to you so that you can respond. Your team can respond.
Professor.
Yes,
Professor, maybe before you hand over, Dr. Musumba had her hand up.
Oh, okay. Sorry, Linda. Please go ahead. I didn't see your hand.
Yeah.
Yes.
Thank you. No, just a quick one. And it's in alignment with what Wambui Kanyi has said about credit worthiness. When you look at AGPO and the statistics that there are of the very low uptake of the, women, youth, and persons with disability, one of the things that, of course, stands in the way has to do with all those requirements of having your tax compliance, having your, you have to be registered, doing your returns and so forth and so on. Those just aligning with what Wambui said. But the other item, of course, has to do with the information we saw recently where it said that 14 million Kenyans are actually in the Credit Reference Bureau. And of course, when you're approaching a bank to be able to ask for, for this credit, that even without the credit guarantee scheme will lock you out, because if you're in the CRB, then you're not eligible to get a loan. And I think you're going to find that a good category of the people who are being targeted under this will likely be on the CRB because of having taken loans before which they've not been able to service during COVID. So how will you go around this? Thank you.
Okay, thank you, Dr. Musuba. I am handing over to you, Roland.
Thank you. And my name is Ronald, not Roland.
Oh, Ronald. Okay.
Ronald.
Apologies. Okay.
Thank you.
Okay.
Let me ask my team. You attempt to answer those questions, then I'll come in last. You can pick up Justus, Mercy, Sila, and Deborah. Not in any order.
Echoka, I'd like to answer just one.
Oh, Echoka, you welcome. Yes, please answer one. Echoka is one of us.
Yeah, thank you, Ronald. I would like particularly to answer one cross-cutting issue where the scholars have mentioned about whether the problem is risk or cost. And me coming from the risk profession, we usually price risk by making the products costly. So it is not whether it is risk or cost, but cost is a consequence of risk. And our aim, part of our capacity building, and through partnerships like these ones that we are forging with this group or this stakeholder, is to de-risk the value chains. And we de-risk value chains by removing the element of uncertainty to remain with a probability. And with probability as the only variables we are measuring, we are able to have the banks lower the cost of credit. Thank you, Ronald. And thank you
so much.
Yeah.
Thank you so much. And I must appreciate the scholars. Your questions are very good questions. They're actually questions that aim at how do we succeed. That's what I am seeing all of you say. In your questions, none of you is saying that we need to fail. I am very appreciative. Like when you ask us, is the problem risk or cost? And my colleague has answered very well. Cost is a product of the risk. It's only in these African markets where you see loans going to the percentages we have. What is the problem? We have been priced to be risky. So the risk then becomes part of your cost. And it's a journey we are beginning together. We can reduce like 0.5%. That's already a journey. And they say a journey of 1,000 miles begins with the first step. One of the requirements of the banks that are participating in the scheme, they must demonstrate a discount. We have not prescribed, but they must demonstrate a discount. It may be just a small percentage, but so we are clear about the problem. It is both the risk, which then affects the cost, and we are headed there. I think, thank you, Achoka. Another person who is answering a question? Sila, which one are you answering? Okay. Or who was that?
Chair, I just wanted to add on Mr. Ichoka's point that the central bank is also keen on the risk-based pricing mechanism with the removal of the interest rate caps. So we are expecting that once all the banks fully adopt the risk-based pricing mechanism, we will really see the value of the guarantee in terms of reduced collateral requirement and reduced interest rates. Because even in your presentation, you showed that banks ask as much as 240% collateral requirement. So those are some of the statistics that we'll be collecting, and that will be of interest to the African Women Studies Center to see are the banks reducing that requirement, collateral requirement, as a result of the guarantee. Are the banks reducing the interest rates because of the guarantee? So we're also expecting that as the market infrastructure continues to develop in terms of the risk-based pricing, then this will really be of value to the scheme.
Yeah. Okay, thank you. Yeah, thank you very much. Oh, Mr. Roland. Okay, sorry, Mr. Roland.
I think we can quickly run through the questions so that we finish.
Okay.
So that we answer all your questions.
Okay.
I think they have answered the one of risk.
Yes.
Because of the interest of time, let me run through the others. Okay. The question of how do we achieve the 4 times? In our own, the way we are going to achieve 4 times, and the question was around corruption, we are sure we shall achieve 4 times. Even in the agreement that we have signed with the various banks, they must be able to do 4 times. So with or without corruption, we would be able to do 4 times. The 3 billion must do 12 billion on the market. That is given. It's not, this is one of the non-negotiables of the scheme. The cost of access we have addressed. And then the political risk, This is the one that we need to work together with you people. We are not politicians, we are technicians, and we provide very good technical things. So we want just to be sure that the right message, you can be part of the story and tell people that this is not free money, and then they are not able to do that. And then we are the issue of trainings. We intend to partner with various institutions. Even World Bank is interested in doing trainings, so we will be able to train our MSMEs. And then the criteria will lock out many MSMEs of this registered and whatever. And this is what we were guided by Parliament. The Parliament did not, if you look at the Hansford report that passed the law, one of the worry of Parliament was that there are many schemes of this kind that have collapsed, and you cannot trace traceability of the money and so what. So the question of tracing the borrowers became so significant. How do you trace them? You trace them by way of them being registered. You trace them by way of them being able to pay taxes. And those are the things. We understand the problem of a group of people locked out, but that is one of the things we expect to be addressed by the effects of the scheme. And I told you the reforms we are doing are interrelated. Now, in the Biashara Fund, the conditions are slightly lessened so that we can nurture you to go to the bank where we have more money. What we need to do is to nurture our women to go to the bank. That's the intention. And the scheme now holds your hand as you go to the bank. The question of CRB and 14 million who are having bad report, this is a question for all of us. If you are me, what will you do with such a borrower? A borrower probably who has some issues with CRB. So this conversation is not a one-way conversation. It's a conversation we can all have. And the way you have also said, you don't want this thing to be having a moral hazard like other programs. So of course we are alive to the issues that are around the 14 million Kenyans in the CRB. We may not have an answer right away in this city, but we look forward to looking at it in terms of how do we progress. I think those are the responses so that we can go to the next level of your, either you are, or of you rejoined us, and
yes.
then we begin to conclude.
Okay, thank you. Thank you very much, Roland. And without wasting any time, and I am also looking at the time, I know we are almost there. I'm going to ask Elizabeth. Elizabeth, are you there to share? And you have 3 minutes, Elizabeth, to quickly go through. Are you there, Elizabeth? Elizabeth?
I'm trying. Sorry, the screen had frozen, Prof. I'm trying to share.
No, you're there. It's okay. Yes. You have 3-4 minutes for that.
Is it visible now?
Yes, we can see you.
Okay, so I will just thank you very much. And thank you once again, the team, for coming. I'll just take you quickly through our partners, the partners we hope to work with in this collaboration, and the strategies that we hope to use to help women uptake the credit guarantee scheme, and the research that will be done. So here we have a list of women's organizations and other partners that we hope to engage in this process. We have the National Treasury, the Gender Sector Working Group at the State Department of Gender. We have the National Gender and Equality Commission, the Kenya Women Parliamentary Association, KEWOPA, the Parliament, both at the National Assembly and the Senate. And when it comes to women's organizations, we have the National Women Steering Committee, we have the Association of Kenya Women in Construction, we have Women in Real Estate, we have Young Women Entrepreneurs in Kenya, we have Young Entrepreneurs Network Africa, we have African Women Entrepreneurship Program, Kenya chapter, we have Association of Women in Agriculture, Kenya, we have the Institute of Kenya Engineers, the Women's chapter, Organization of Women in International Trade, We have 50 million Africa Women Speak, and then we have International Network of Women with Disability, among other partners that we have not shared here now. And then we have the Kenya Private Sector Alliance, KEPSA, and the Kenya Bankers Association. So what strategies do we hope to use to upscale the access of the credit guarantee scheme by women entrepreneurs? We hope to bring women together to share information that is related to the credit guarantee scheme and invite the Treasury to explain the guarantee scheme and how it works to them. We also expect to hold joint discussions with the women and each of the implementing banks, the relevant departments of those banks. And within the context of government expectations, we want to collaborate with women's organizations to negotiate for best interest rates for women entrepreneurs. We also wish to train women entrepreneurs and build their capacity in collaboration with the women's organizations that we have identified. We also wish to identify challenges that women entrepreneurs might face in accessing the credit guarantee scheme, and then identify the opportunities that can promote women's access to the credit guarantee scheme, women entrepreneurs' access to the credit guarantee scheme. And here we are looking at what works for women so that they're able to utilize this important scheme. And then on the side of research, we want to develop indicators for monitoring the uptake and growth of women's enterprises for access to the credit guarantee scheme. Jointly with women's organizations, monitor the implementation of policies and regulations around the credit guarantee scheme, monitor the functionality of regulations and procedures, and share with the Treasury, the National Treasury. Jointly with women's organizations, follow up with women who apply for the credit guarantee scheme to monitor their access and uptake. Analyze gender disaggregated information submitted by Treasury to Parliament for sharing with women entrepreneurs, women's organizations, and other partners. Prepare reports on all activities and share with the National Treasury. Use the lessons learned from the implementation of the credit guarantee scheme and develop proposals on how other affirmative action funds can be made more accessible to women entrepreneurs. So thank you very much. In brief, that is how we hope to have this collaboration work for women entrepreneurs' access to the credit guarantee scheme. I welcome your comments and questions.
Yeah, thank you. Thank you very much, Elizabeth. We have rushed through this, Mr. Ronald, and give me a second. I asked Meroka whether there's something she wanted to add. She was party with another team to this presentation. Meroka, are you there?
Yes, Professor. I think we have presented for now what we have, and we can then take the feedback, especially from the National Treasury and the members on what they think of this strategy. Thank you.
Okay, thank you very much. So, Ronald, that's where we are. And that was what we were proposing to do in this collaboration. And maybe you can give us your feedback on this.
Let me first of all allow my team to react. Choka, do you have something?
Yeah, yes, Ronald.
Yes.
I think I want to thank the stakeholders very much. I think this is going to create traction for us. We've been looking for this kind of input in the strategy, especially, and I like the way they said that they will help us communicate to the financial institutions on the aspect of bringing the interest rates down. The president mentioned that he would like loans to be a single-digit interest rate. So, Chairman, I appreciate this. Thank you.
Okay, thank you.
Mercy.
Thank you, Chair. Mine is to congratulate the team for the good presentation and subjected way forward on how we can collaborate with the women, especially in this on the opportunities that can promote women access to the credit guarantee scheme. This credit guarantee, the main aim is to promote access to credit. And when we have these opportunities with our collaborations, then I think it's a welcome idea. Thank you so much for the input and for your interest. We can see that it's going to add value to this credit guarantee. Thank you.
Justus?
Chair Justus has been called to.
Okay, Sila?
Thank you, Chair. I would like first to appreciate the work that is being done by the researchers. I appreciate the all thought and idea and even the strategy, especially when you look at the stakeholders that have been listed, you realize this is very complementary to what we are doing. In the design and implementation, these are stakeholders that we would want to engage, and this strategy can help us greatly. The only one point that we want to keep at the back of our mind is that, and this is something that we have also been grappling with ourselves, Chair. You remember that, you know, we want uptake to be more than 100% where possible. And then there is that time where you feel like you may end up onboarding people just because you have onboarded them. So I would also indicate that it's possible that the scheme will not be giving money, and that borrowers may never have a one-on-one access to this side, because they access it through the bank, and the bank does the primary screening. I don't know how that boards in the strategy, but this is one of the best ideas and very complementary to our work. We appreciate the work that they are doing. Thank you so much.
Okay, thank you.
Deborah?
Yeah, thank you, Chair. Just to allude the point that was made by Professor Linda Musumba and these strategies, Professor alluded to the point that a lot of women may still be locked out by the fact that they may not be having credit-worthy businesses. And now this is where the bullet point number 4 comes in from the strategies that the center is planning to undertake on building capacity of women. This is very, very important because, again, the law states clearly on who will benefit. So we are alive to the fact that some enterprises, including women, might be locked out because they might not be eligible. So that is why now this component becomes very important. So this is just to appreciate what the center is intending to do, and we really look forward to such collaboration so that as many women as possible can be credit worthy and can benefit from this intervention. Thank you.
Thank you. This is some well done job. We must appreciate the center for an attempt to engage with us in this manner. I would want to say that one, we will request that you share with us. Do you have a concept note like something like that, so that one you'll be sharing with us that concept note on this and highlighting these issues? There's one thing that you mentioned about policy. I don't know whether you can go to that slide of policy and the regulations. I don't know what you were saying there. There's a slide around policy. What do you want to do?
Here,
yes. Yes.
Here we are looking at the fact that the credit guarantee scheme has a mechanism within which it is operationalized. And so we want to make it possible that the women's organizations and that are targeted with this credit guarantee scheme, when it is being implemented, it is beneficial and friendly to the women's organizations, such that at the end of the day, we can report back and see where there could be, we can advocate for if there could be changes in the policies, if it is the policies that are preventing women from accessing this scheme and the regulations around, or how they can be moderated or to accommodate women's needs.
Yes. I think if I may add there, Mr. Ronald, yeah, we're saying that in collaboration with you, the research we get, the information we get, from the women as we monitor their own participation in the credit guarantee scheme. If there are any barriers and so on, we'll be able to share to share with you. And then the Treasury can see these regulations, facilitating. Can we improve them? Because we assume that when a project is being initiated and the regulations are there, there'll be monitoring, and normally, we'll look at the regulations to see can we improve them so that the access is better. Yeah, I think that's what we are talking about.
Okay.
Yeah.
So for me, these are not bad proposals. Just share with us in a manner like I've suggested, maybe with that kind of a concept. We'll look at it more. My team will go through what the proposals are. But the first thing that we say, these are welcome proposals for us to advance. There's one thing Sila said which is critical. It should be at the back of our mind that it is purely a guarantee and not funds going to women. We must be sure that the women know that they will still have to undertake the normal processes of the bank. But monitoring what the banks are doing is a very important thing, so that we are all together as Kenyans to be sure that the banks are doing the right thing for our people. So one, it's a welcome idea in terms of what we are doing, and we look forward to this kind of engagements. So this is not a bad idea for us. We agree that we can work together. I think this was a very meaningful discussion from our end. I don't know whether we want to start doing our last conclusions. I have taken more than 20 minutes before joining the other meeting.
Yes.
So
And
you can do your remarks and then I conclude.
Okay, thank you.
Unless there are still some pending issues.
Okay. I know Wajiro has been raising her hand, but Wajiro will give you 30 seconds or less.
Okay, thank you so much. Thank you so much, Professor. And I wish to thank Mr. Ronald and his team. And in fact, the question I wanted to follow up quickly was just that what you have talked about. And Mr. Ronald, there was a question that you were asked by Professor, I think Professor Dr. Wendell, about monitoring and evaluation. And I just wanted to link the two. I wanted to hear probably, or to request you to comment on whether you are carrying on monitoring and evaluation from your end, and together with the Department of Monitoring and Evaluation at the Ministry of Devolution and Planning. Thank you.
Okay. Let me take that one very quickly. The banks are expected, we have developed what we call a reporting template jointly with the Central Bank of Kenya, because the banks are supervised by CPK. So the banks are expected to report on a monthly basis on this product in a segregated manner. That's the first aspect of M&E, the reporting aspect. We will also develop an M&E framework with a manual to do broad M&E, where we will be testing the impact of the whole program. We have already thought about our theory of change, what we want to see at the end of the day. So that theory of change has to be monitored. It has to be evaluated. So monitoring and evaluation is part of this. We would We will appreciate collaborations. If you want to collaborate with us, that is still okay and very welcome. I hope I have answered your question, Professor.
Thank you so much. Yes, you have. Thank you.
Yeah, thank you very much, Mr. Ronald. I think this has been a very good meeting for us, a first meeting. We are very interested in this collaboration. Would appreciate if you could also share your presentation with us, because it had very good information, as I said a little bit earlier. We would also be interested, for instance, when you are doing the MRD framework and reporting templates, the one you have reported, we would be interested in also maybe participating where, if you think it necessary, just to ensure that we have captured the women's agenda on board these frameworks, so that as we utilize them, we are able to collect the data that is also very in the interest of women. So we are ready as researchers and as people who are actually also promoting women's economic empowerment. As I said, we have a research program, the Hub, the same with the KU, and we would be able to bring our technical expertise also to Treasury to work together if the opportunity allows. So I think this has been a very good beginning meeting, and I thank you very much for your, for bringing your team together with our team, to discuss this very, very important issue. We are also aware that, like Professor Kiriti started earlier, that the Mama Bokas, those ones at that lower level may not be reached, but we also have many other women whose economic empowerment can be addressed by this credit guarantee. And we think it is in our interest, it is in the interest of the women, it is in the interest of the country and in the economy that we contribute to success of the credit guarantee scheme. And that's what we intend to do through research, monitoring, bringing the women together and so on, with the strategies that we have presented to you, which we continue to improve on. And we hope to be sharing the research findings also with you. So we are very happy to collaborate with the Treasury on this.
Thank you.
I'll hand over to you. Yes, thank you.
I want to say on behalf of our National Treasury and our team, I think this was a very meaningful engagement and discussion in terms of how do we make our country better in terms of this product. We appreciate the support from your end and the collaboration. What you need to do, please, we didn't present the law. We have a whole presentation on the act and the regulations, which my team will be sharing with you, which you need to look at as you discuss with women on how to go about this. We are also interested in evidence-based policies, so your research will be meaningful to us. So don't shy to give us outcomes of your academic research, so that we do what we call evidence-based policy framework. Our PA is a doctor. He likes also researchers in terms of what we want to do. By the way, we will be conducting an initial baseline survey of the bank products by CBK as we start off this product. We have been in discussion with them so that we have some understanding of where we are and how far we are in terms of this. So we're not just doing what we are doing, we also want to do things that are informed by research. I can see they are communicating with us that we've been working on them on a baseline survey to find out where we are, so that we can, as we go forward, we are starting from a base. I think we must appreciate that the meeting was good, and without much ado, I want to declare that the meeting is ended. Until next time, we will keep talking. Thank you, Professor Kabiru. Anytime you can always call, and my phone will be available for that.
Thank you.
Thank you.
Thank you very much, Mr. Ronald. Thank you.
Okay.
Thanks, everybody. Have a good day.
Thank you. Bye.
Bye.